Good morning. It's a pleasure to be here. Let me give you a quick overview of how this hour of time is going to go. I'm going to ask each panelist to give us 30 to 45 seconds only of something that we couldn't see from their LinkedIn profile or the bio for this conference. Nice. That explains a little something about why they're here. I'm going to then ask a set of questions. I'll start by asking only one panelist each question instead of asking everybody to answer the same question over and over. But the other panelists are going to jump in with their perspectives on each question as they wish. We're going to end with a good 20 minutes for Q&A. So please start thinking about some questions you might have for the panelists. And I will start by saying that I majored in folklore and mythology. And that means I take kind of a longer view on time horizons than we often hear about in business school conversations. So that's something that I'm bringing to this conversation today. So Chris.
Yeah, you're speaking my language with longer time horizons. Because Acumen is lead word on our website is patience, and I think it'll be a big theme of my talking points here today. But I just want to introduce myself and say hi, Chris Wayne. And I think one thing that folks don't know about me from LinkedIn, it's a great prompt. I grew up in agriculture in a small farm family, and agriculture is a PR problem. It is not cool to be a farmer. And I struggled through my teens to understand the profession and ended up in Costa Rica where I sort of refound the profession. But I think my entry point was this realization that the contribution of small farmers to our food system, which is as much as 35% of all the food you eat. So pick out one meal of your day, that's coming likely from a small farmer around the world, yet their comparative vulnerability in the time of climate change is just a staggering juxtaposition. And it's motivated me in this work for a long time.
Great, thank you. Okay, Caleb.
Yeah, 30 to 45 seconds. No, that was perfect. I only have 10 to 12-minute rambling explanations of what it is that I do. But in that context, maybe I'll say, I feel like my career has been the classic people-pleasing, child of parents that disagree about lots of things, particularly economic and political policy, to reconcile their differences. So I had a classic Republican financier dad and a teacher Nader voting mom, and I think I have been trying to create a solution that will please everyone desperately for most of my career. I don't know if I'm there yet.
Oh, great. Well, I didn't plan to go all the way back to how I was raised, but I feel like I need to. Hi, everyone. Erin Phelps with the Freedom Fund. I grew up in sort of a solidly middle-class background, and I think my kind of turning point in terms of my life purpose and career was really developing an understanding and consciousness around labor and labor rights. I came to college with basically none and worked with a professor named Hung Kam Tai, who's an amazing scholar. He looks at transnational families and labor issues. And that kind of drove me to be really interested in the impact of labor on not just individual people's well-being, but on their families and outcomes. And so ended up through that spending time researching in Nepal, looking at impacts of labor rights and labor abuses in the Middle East on not just individual Nepalese workers, but on their families and their children who are left behind. And that just drove me, I think, getting to talk to individuals who had personally experienced the impacts of just lacking labor protections and doing really precarious work, maybe want to get involved and think about specifically how to resource work that looks at protecting those folks.
Great, thank you all. So I want to not depress us too much. So I don't want to spend too much time on the first point that we're supposed to make for you all today, which is about the size and impact of shrinking aid flows on international development. None of those trends are good. It isn't just the United States that has eliminated USAID. The UK government has cut its international aid in half. Many other countries in the developed world are doing so, including Germany, and are going to continue to need to do more, especially as the Western countries need to find money from somewhere to ramp up their defense budgets. So all of this is going to continue, and we see the impacts not just directly from foreign aid budgets, but from other kinds of expenditures that governments around the world are no longer making around energy commitments, around agriculture commitments, and other kinds of funding sources that we took for granted for a long time. So I want to instead talk a little bit about how we can deal with that. As somebody who writes about and studies philanthropy, I can tell you there is not enough private philanthropy in the world to come up with the amount of money that is vanishing from international development and international philanthropy, period, full stop. Lots of initiatives underway by big foundations. They represent, at best, 3 to 5% of what's gone. While it's good that the Gates Foundation is going to be spending out over 20 years, increasing its flows, that means that 20 years from now, it'll be gone. And I talked a little bit about taking the long view. To not have the Gates Foundation 20 years from now is going to put a big dent in philanthropic capital flows. So instead, we need to look for other ways to achieve our goals for people and planet. And so I want to ask Erin first, how philanthropy and advocacy-driven organizations are adapting their strategies in light of this new reality.
Thank you. And a lot of what you touched on, I'm glad you touched on, because I think it is important to ground this, and that this is not just a US trend, that this is also tied in with attacks on civil society and shrinking civil society space. I think I can speak from the perspective of the Freedom Fund in that we are a collaborative fund. So we are a fund that brings together funding. We want to mobilize new funding towards this issue of modern slavery, human trafficking, and then be redirecting that to supporting organizations that are traditionally left out by donors a lot of the time. And like you said, I think a lot of private donors are really grappling with their role. A lot of donors, I think of themselves as being able to play this role that is complementary to public funding in terms of being catalytic, in terms of funding things that are early stage and risky, things that are, for example, holding governments accountable that public sector is not going to be funding. I also think we see organizations, using this opportunity to rethink sustainability and just overall dependence on aid, and specifically, many of our grantees were heavily funded through U.S. government, whether that's through multiple layers or directly. I think some are seeing it as an opportunity to reinvent, but they're still facing the realities of very limited resources, and at the same time, this shrinking civil society space that makes it even more difficult to, be doing work that is resisting norms or resisting government actions. At the same time, I think we're talking about this environment of scarcity, and I often want to make sure that we are clear that there is still new wealth being generated, and those of us who do work with donors, have a responsibility, and I think an interesting opportunity to get creative and really seek out where is that and who are those folks, and what can we do to play a role in donor education and bringing them in, and specifically for us, that's really about making sure that donors understand the value of investing in frontline organizations and looking at investing in groups that in a traditional way they might think of as risky investments, and really kind of challenging that. And then also I think we as a funder are thinking about, and I think we're going to talk a little bit more about resilience and what that means. And for us, that means investing in multi-year funding, providing core and flexible support, thinking about leadership, thinking about investing in long-term leadership, and then also thinking about still needing to hold philanthropy accountable. Just because there's this feeling that, okay, now private philanthropy needs to step in, that doesn't mean that they don't still have the need to be held accountable for where funding goes and who's not getting it.
Great, thank you. Caleb, Chris, do you want to add anything, Caleb, about some of the kinds of new sources of capital that your organization is trying to bring into this conversation?
I'd be happy to, Melissa. It is, there's been an enormous amount of disruption for sure in our space. I am on the impact investing side. USAID has been a critical funder of emerging managers through grants, through credit guarantee programs. That is going to be a gap that's very, very hard to fill. At the same time, I think it is a privilege to work in this space where there is, I think, still quite a bit of optimism and actually still quite a bit of growth. And Trimtab specifically is focused on, getting very high net worth individuals and families more involved in this work. And that energy and that momentum and that participation seems to be increasing, as does the focus on using, both catalytic capital, broadly defined, that those of us in the space, still maybe forget how little is penetrated globally and still quite an underutilized tool, but particularly, a focus on intermediaries and fund investing and financial innovation, which is something that I think is growing at government agencies, amongst family office strategies, and for impact investors as well. And so, I do think there is a sense of optimism and growth. There is more private capital that is coming into this space, even as the challenges are daunting, and some of the major historical players are fading.
Great, thanks. Chris?
Yeah,
What are you doing differently?
Yeah, I'll never forget the moment. We had lots of colleagues at AID, folks who'd moved their entire families to remote parts of the world to do the work, texting us. And it was a raw sort of moment. We were shook that morning, and Jacqueline, our CEO, took us into the office, and she sort of sat us down at this central meeting space and was like, look, this is horrible, but I need to remind you that Acumen was created as a way to build off of, but also as an alternative to direct aid. This was a way to take the tools of aid and the flexibility and the social commitment to it and leverage the tools of business and the rigor there to solve those problems effectively. So she said, this is going to be a hard 6 months, but we are in a very good position as Acumen, as a leader in this space of blending that philanthropy, even the 5% you described, with the rigors of commercial financial markets. That can have, when you do it properly, immense, massive effect on the global poor, the poverty, the resilience issues that we're talking about here. So to Caleb's point, it's been incredibly sad and hard and raw from an emotional perspective, but there's a lot of enthusiasm now around how the tools of business can solve these problems in the space that aid is left behind.
Great. Let's talk a little bit more about some of these funding models and how they might help us meet this moment, which is probably going to last for more than a moment, FYI, right? I want to start with you, Caleb. Can you say a little bit about how you see fund managers responding here, where you see the greatest opportunity and where you still see some gaps, perhaps?
Yes. So, I've worked pretty much since graduation, a very short stint in management consulting, and then collected my signing bonus on the day of my 1-year anniversary and went off to the Rockefeller Foundation. Nice. And since then have worked, with catalytic capital and specifically in the field of innovative finance and working with emerging managers who are starting scalable and replicable strategies to essentially get capital flowing where it ain't, as one of my favorite players in this space would say. And I think there's sort of a hierarchy of well, maybe not a hierarchy. Our particular focus is really the very large intuition that catalytic capital is still very foreign to most asset owners, government and private, globally. It is not philanthropy. It is not commercial investment capital. This tool still fundamentally does not fit into the vast majority of bureaucratic frameworks globally,
That point,
period.
could you give a brief definition of catalytic capital?
It is just capital that
Right
is impact first. It is first seeking impact results and is willing to accept something less than market returns in terms in order to do that. And frankly, there's a whole discussion that you can have as to whether, what exactly market terms are, because I think perceived risk is an enormous constraint. And do you consider something to have market rate potential ex post or ex ante, or now do you think about all of this? But at the time of making the investment, this is capital that is going where other capital is not. And by prevailing market opinions is willing to accept something considerably less than what would be considered commercial.
And I would say that it's what it's catalyzing is some of the more commercial markets. So we all
it could be catalyzing new operating models of delivering what will always be structural subsidy, right. Or it could be a specific route to address perhaps primarily innovation and perceived risk in something that should be fully commercially funded within 5 years. And there's a whole range of different strategies. But I just have to make the point that catalytic capital remains deeply underutilized, in my opinion and my experience. And that is a very high level category, but it still is not used. I think within catalytic capital, there are a number of challenges. And, I have worked specifically in the field of fund investing, which, is kind of unloved because it is wonky. It is perceived as distant from the impact. And, it is also perceived as a layer of fees. And these are kind of, I think, historical biases that come from both philanthropy as well as commercial finance that have specifically disadvantaged funds and financial innovation intermediaries as an impact solution. And I think that we have had an outpouring of social and financial entrepreneurship in the field of really compelling, financial strategies that have really struggled to raise capital. That's the next level. The next level beyond that is that the few people that do focus on catalytic investing in funds are 99.9% non-traditional intermediaries, meaning they are DFIs, they're development finance institutions, they are nonprofits and philanthropies, they are single-family offices, and the unifying theme is that none of them raise external capital. That is not part of their mandate. Philanthropists don't want to be asset managers don't want to be philanthropists. And that is a fundamental infrastructure problem because now with more families, I think, and high net worth individuals exploring catalytic capital strategies, there is just a lack of infrastructure for them amongst the existing advisors and intermediaries. Acumen, of course, is an exception. There are not very many of them. It is still very hard for folks that are looking to do this work to access it through their typical channels. So I think that's the overall environment that Trimtab kind of sees. What we look for, and I won't cut myself a little bit short here, but basically what we look for in fund managers is what we call multimodal additionality. So yes, we are looking for fund managers that are generating counterfactual outcomes on the ground, where impact intentionality is core to what they are doing. These are vulnerable populations that are customers and clients and stakeholders, vulnerable ecosystems, neglected markets, proven interventions, aligned governance and incentives. But we don't actually make our investment decisions based on sort of a proprietary framework of social return on investment or impact per dollar that we then try to compare across Indian ag tech, venture capital, and Appalachian community health. We look at other levers that we think are maybe a bit farther along in your ability to assess than a pure impact across sector framework when you're looking at fund managers. And the second one where we probably spend the most amount of our time is what we call manager level additionality. And that is, what is the fungibility of the track record and the proof of concept that this manager is creating? Is this a strategy that is actually going to address the massively inefficiently, high innovation premium in financial services? That is a topic I could go on and on about, the way that it is structured. Is it actually going to crowd more intermediaries and fund managers into a neglected market, not merely to actually generate direct outcomes. So we look for direct outcomes, we look for market builders and systems potential that have the potential for replication, not just scaling and attracting more diverse forms of capital, the fund manager, and then we look for capital additionality. So where can our $1 to $5 million investments make some meaningful difference in actually helping this first-time startup strategy get to a minimum viable product and launch and deploy and then move on. And so that's the kind of basic framework that we use.
So, Chris, I'm going to ask you to say a little bit about Acumen's patient capital model, and also I'd love to know whether you see any changes in that in the current environment. And then, Erin, I'll ask you to talk a little bit about philanthropic vehicles. So go ahead, please.
Yeah, I think Jacqueline's idea when she started was take in grant dollars, so donor dollars, the Rockefeller Foundation from Gates, and redeploy those as the earliest stage equity investment, convertible notes, of course, and some mezz finance, into innovators solving problems of poverty around the world. And that was like, in 2001, that was a big idea. That really did fundamentally change the way that donors looked on their return on the dollar, and the way that we could wed the worlds of finance and philanthropy at the same time. That is still bread and butter to Acumen. The initiative I work under, Trellis, has made 12 deals in innovative agricultural companies, solving these problems in East and West Africa over the last 2 years. And we're deploying a 400K ticket into a early stage, 250 to $1 million in revenue, brilliant team who's totally overstretched, whose unit economics are a mess, who's working in a cereal grain product with women farmers in the sort of rural regions of Ghana, right? And we're trying to get them to scale a company, raise a bunch of commercial capital, and get to a point where they can exit. That's a crazy thing to do. I'll just admit it outright. But I think what's changed is we recognize that those companies weren't seeing liquidity at a later stage of the markets. And what we did starting about 5 years ago was we spun out a series of blended finance facilities, which have now become core to our work. And we had the great pleasure last week of announcing, more or less as Trump was berating the UN, announcing our hardest to reach facility, which is a $250 million facility that will extend electricity to 300 million of the last unelectrified people in the hardest to reach countries of Africa. And it's a really unique blend of debt, philanthropy, technical assistance, and the biggest win for us in that was that Shohan Bank, a Korean commercial bank, put $20 million of their balance sheet equity into our fund, which meant that we were finally moving out of that scrappy Acumen stage out to commercial financing on balance sheet for large-scale funds solving problems of poverty.
Great, great. Erin, can you say a little bit about how you see philanthropy reacting and what funding forms they're using, including the collaborative kind of funding that Freedom Fund uses?
Sure. Yeah, and when you were talking about sort of this general feeling of uncertainty or not wanting to invest in these sort of intermediaries, I think there's a real parallel around collaborative funds and philanthropy. So the Freedom Fund, our model is essentially, like I said, to mobilize new funding, to bring donors together, and then to direct those resources in the form of grants, but also a lot of other forms of support. So convening, support for leadership, and a lot of capacity building for frontline organizations. We were founded about 12 years ago, and I think in the past decade, I would say there's been a really substantial growth in these types of collaborative funds. And I think part of that is due to the fact that there has been a change in mindset of donors, of some acknowledgement that donors can do more together when they're willing to. It requires humility, and it requires maybe putting aside your very specific foundation strategy. And I do have to say, this is actually not a new model. Feminist funds have been doing this for decades, but I think there's been this kind of growth in the last 10 years. Bridgespan has done some really impactful research actually looking at this landscape and evaluating, basically asking collaborative funds, if you had more money to move, how much could you move in a year? And it's like billions of dollars. So there's certainly a lot of potential there. Collaborative funds are not inherently high impact or equity focused, but they can be really powerful vehicles for those things. And so we're a part of a landscape of collaborative funds that are explicitly focused on deriving funding to frontline organizations, to groups led by people with lived experience. So for us, that means organizations led by survivors of human trafficking who really struggle to access philanthropic funding, both because of just the structures that be, but also because of bias against them as not being equipped to be leaders. And I think also, like, it also matters how that funding is being invested. So for us, we invest those grants and all that support in what we call a hotspot model. So we're essentially pushing resource to a specific geography around a specific form of modern slavery and supporting a group of organizations to work really in an ecosystem or a network model, with the idea that, again, there's added value there. There's a lot of ability to also share resources. So while intermediaries can be seen as more costly, in the context of our model, that we actually see a lot of cost sharing because organizations are supporting one another. We're able to deliver capacity building support as a group. And then I think just in general, I see this as the way forward. The philanthropists needing to come together, again, to put aside sort of this idea that we each need to go it alone. There's a lot of different structures that work, and some involve donors being like hyper involved in actual grant making decisions. Everything from that to with the Freedom Fund, we've got 70 staff globally. We have a board that includes some of our funders, but ultimately those funders are actually putting trust in the organization to be able to move money and to be able to make decisions that ultimately serve the impact goals that we have for the fund. Yeah.
Great. So I want to turn now to the whole idea of resilience, scaling, and timeline. Right? We have some ideas about innovative forms of financing and funding, but we need them to get to scale, and we also need to create resilience, especially for organizations who have lost considerable funding as well as status, I would say, in the world right now. So I want to start by asking Chris how you think about the models that actually scale and replicate versus the ones that already that remain tiny. You spoke a little bit about that in terms of the evolution of Acumen.
Yeah.
But what are some of the things that you look for things that will actually scale and replicate?
Yeah. It's so easy to get stuck in your ways, and we work in an organization that's messy at times because we're constantly sort of questioning what it is that we do, why we do it, whether we're doing the right thing. And it drives certain people nuts at Acumen. Other people really thrive in it because it's a constant process of reiteration. The number one thing I can say about fund development, especially in impact investing in emerging markets, is making sure that you define your problem and ensure that the market is going to pull you into that you're not going to push a solution down on them. And I think what we did so well with Hardest to Reach was define a really clear problem set of 600 million people who just could not turn on a light in their house. And that was so accessible, so obvious to people that the fund structure itself sort of just flowed out of a really good, accessible problem that could be solved with the right type of capital. And I think so often we get lost in our sort of strategic nomenclature jargon and try to sound smart out in the world, but there's problems that just need solving. And when you define them effectively in the market and you ensure that there's pull from the market, people want to solve this problem, the structure itself sort of falls into place. There is capital out there. Jacqueline always says it's not that capital is scarce, it's that capital is scared. And when you put a $20 million first loss layer into a fund that tells a commercial bank that if shit goes belly up, you're still going to be made whole, commercial capital will flow, and you can solve these defined problems. So to me, it's define your problem, make sure that the communities you're trying to impact are a part of that definition of the problem. And the fund structure and the capital will almost always flow from that.
Right, but you have to do a lot of de-risking.
Oh my God, that's all we do.
That's all you do.
And we eat a lot of crow for other people.
Right, all right.
Come in.
Caleb, how do you think about scaling and about timeline also for the kind of work that you're doing and for the kind of funders that you're trying to attract?
We have quite a diverse portfolio that ranges from stuff that looks like returnable grants, trade finance to indigenous-led co-ops in, areas that 1 acre wouldn't touch, and, Syrian financial institutions operating in really challenging conflict zones, to stuff that we think is just basically suffering from perceived risk and is a fully commercial strategy, the minute that we look at it, and there just is not a fit from capital markets in terms of capital that's willing to engage because it is scared. And often these are structures that are massively over-subsidized, and we see our job to try to be almost like, an action-oriented deployer of catalytic capital that leverages a very fragmented, very inefficient, but very, very collaborative network willing to share its pipeline and its expertise to kind of almost be like arbitrageurs. Like, where can we just have the maximally efficient, additional momentum to launching a number of different strategies that all themselves have potential to scale, to crowd in more intermediaries through replication, while still doing so in a way that allows us to continue to deploy risk capital and to maintain a very, very high degree of risk appetite. And what we look for in funds and the sensitivities that we have are like, we really want these things to be, at the very least, functional pilots. And by that I mean we come in as early as we possibly can, but typically after a couple of anchors, or at least giving visibility on a viable first close. And we tend to not take a lot of launch and deployment risk, which is maybe weird to say as a catalytic investor. But I think there are so many deserving opportunities out there, frankly, that we try to be really efficient in terms of helping to make a difference in some of these aspiring pilots. And so, we like to see a model that is, has long-term support. If it's being grant funded, does it have a source of that revenue from a parent organization, from a long-term, grant or government partner, and we also look for them having the right stakeholders. We look for diverse, capital participation. If this is ultimately going to be a government advocacy tool, then are those folks directly involved? If this wants to raise commercial capital, then are there strategic banks in this capital structure? Are they already beginning to put together, what's going to be needed to scale? But for us, it's really a question of, I think we want as many compelling and promising opportunities to reach that minimum viable product and exist for 5 years, long enough to have some kind of a demonstration, effect as possible. And so, when we do our risk analysis, it really is around, is this thing going to exist for, the span of this pilot at least? And then, how do we think about where we're allocating our risk capital beyond that? Yeah.
Thank you. I'm going to ask one final question of Erin. Others can jump in real quick before we turn to Q&A. All of us here are talking essentially about systems change, right? How do we change the systems around the world that have created persistent poverty traps? How do we change the systems that are creating the global warming that's doing so much harm? And at the bottom of all of the analysis of systems change is always mental models. We are living in a world right now where the social compact that supported international development funding, the social compact that, supported the idea that we should put money into changing climate outcomes, the social compact that said that we should care about what's happening in countries far away from us, that social compact has changed dramatically. The social compact that said that capitalism was going to be a good solution to these problems, those numbers of people who agree with that are dropping. The percentage of people around the world living in democracy is dropping. So what do we need to think about long-term, right, long-term, to change some of those mental models so that we're not constantly fighting this uphill battle? And I want to start with you, Erin.
That's a great question. Yeah, I mean, I think in terms of within philanthropy, which is where my mind is, I do think there is still work to do around really making the case for investing in social movements. I think when we're talking about resilience, yes, we may be thinking about, can we invest in things that are resilient for long-term outcomes, but we're thinking deeply about what is our contribution to building that resilience, and that means these long thinking at the speed of which social change happens, which is not in 1 or 2 years, but it's in 5 or 10 or 20 years. I also think this is going in a slightly different direction, but in rooms like these where we're talking about private sector investment, a really big piece that I think sometimes we aren't talking about is also the harms that private sector can have on communities and workers. So this is something that the Freedom Fund focuses on. We support a lot of work related to this, but really thinking about how companies themselves are acting within their supply chains and what the guardrails and systems need to be to really motivate behaviors around that. So for us, that means philanthropy actually investing in workers and communities who are actually able to do the due diligence that companies need to ensure they're not having harms in their supply chains. We know that there's millions, billions of dollars being invested by companies in CSR, in dashboards and tools and consultants. There's a whole ecosystem around this. But at the same time, we also know that grassroots groups and worker groups are actually much more effective at giving accurate information about what's actually happening on the ground and in their community. So I just think it's really important to point to that as well. In combination with philanthropy, we need to make sure that there are these guardrails. That also means policy. That means policy like in the EU around mandatory human rights due diligence. Yeah.
Great, thank you. Anybody want to add anything? I'll just add one final word, which is I think whatever kind of investor or donor you are in this space, if you're not allocating a certain amount of your resource toward communicating with the public, toward understanding the public, toward building a sense of purpose with the public, you're going to find yourself more and more marginalized.
Yeah, that's sort of where I was going to go. I mean, we went to COP last year, which is Conference of the Parties. It was in Azerbaijan, and I was like halfway through COP, and just like the rhetoric, which was elitist and pretentious, had just worn me down. It was like, man, like who actually has access to this room and this experience and this conversation? And there was a couple of young YouTubers there sort of provocatively talking about the stories. And one of the stories he told to his hundreds of thousands of followers on YouTube was about how orange juice isn't gonna be from oranges anymore. It's gonna shift to like a sugary / flavored drink because orange groves around the world are shifting due to climate change. And it struck me that that story is way more impactful than anything that I could say on a stage about climate adaptation and climate resilience. And he had tapped into and knew what his audience looked like. And we just launched a campaign last week called Food Talks. And it's like, what would you do if you woke up in the morning and you couldn't have your cup of coffee? And this little sad coffee cup drinking your cup of coffee is on the thing. And it's like the idea that we are encapsulated in this world where we are very sort of virtuous in our our solution orientation, yet we're leaving out so many people from this conversation who live and breathe and eat the problems that we're talking about. Right. Is scary. So I really appreciate that point. I think that is the mental mind shift that has to take place.
Great, thanks. Okay, we're all ready for Q&A. I can't see the back so well because of the light in my eyes, but I do see a hand right here. Oh, and one there too. Okay, thank you.
Can you hear me?
Yes.
Okay, perfect. So just wanted to start off by thanking the panel today. This was really a great discussion. My name is Marissa. I do work at JP Morgan, so I do work on the dark side. But I primarily work with mission-based international NGOs, so I can sleep well at night, working at JP Morgan. So my question actually, so when everything happened, when USAID was pulled, a lot of my clients were calling me saying, we need to shut down a lot of our programs, we need to restructure. all that wonderful stuff that goes into it when funding is pulled. This was the first that I heard that funding is being pulled in the UK and Germany and other like countries. So just wanted to hear your thoughts on, how NGOs should think about deploying their capital when their usual places where they go for the capital is no longer there to fund their great work that they're doing around the world.
Right.
And my second question, within my group, we have, a lot of nonprofits. A lot of them did have to shut down when USAID was pulled because that was their main source of revenue coming in. And the general feedback that I'm getting across the board is they don't know how to position themselves well for the grants. A lot of the grants are delayed. They just don't know how to get in front of the donors.
Right.
So they're looking for that guidance as well, to continue to do their good work. So a lot's going on in the space, but anything that you can share that as I'm having conversations with my peers at the bank and some of my clients, really would love to hear what I can take back to this group. Thank you.
Do you want to
speak a little
start?
bit,
And then,
yeah.
And then I live in that world too, so I
Yeah,
can add
please,
a little.
yeah. So this piece around what we're seeing across governments is certainly true around areas like gender justice, including governments who we traditionally, like Scandinavian governments, who might have been viewed as being these progressive donor governments. And I know certainly for our partners, that's been across the board, moving away from, especially with an issue like modern slavery, where you really need to make the case that the issue is intersectional with all these other things like climate and economic justice. And then, I think we are going to need to be seeing, and I think this is not up to all these smaller organizations themselves necessarily to figure out, but new models of collaboration, mergers. I think there is really room for this kind of ecosystem of intermediaries and other forms of support that funders actually should be funding to help these organizations pivot and, seek out new strategies. I think what I'm seeing among U.S. organizations is, okay, we're really going to pivot towards thinking about individual donors, thinking about folks who are like new wealth generators, family offices. But again, the accessibility piece is there's such a gatekeeping there. So again, I think that there is I would love to see more creativity around how do we break down those gates rather than kind of just keeping people out. I know that's not like the solution, but I would hope that we'll see some efforts towards that.
I'll just say, this was a big part of Trimtab's founding. We were incubated by the Impact, which is a network of about 100 very, very wealthy families around the world. And they are kind of a community of practice around impact investing. How do you align your capital with your values? What does that mean? And the same pain point, I'd seen as a practitioner, which is, we would have families calling us up at Rockefeller and asking if we would consider managing their money, and Rockefeller has no interest in doing that, which is a deep inefficiency in this space. They were seeing from their families, which is we cannot find people. Like our advisors simply will not invest in the type of stuff that we want to invest in. And that wealth also just continues to be unbelievably fragmented. And, part of Trimtab was, hey, can you actually tap, some leaders in this community and then get them to basically fundraise from their friends? Like, do you have to start from a position of trust in a hard to communicate, hard to measure, nascent, fragmented space where everyone has different ideas about what they want to do for impact and different sector and regional preferences and all of the rest of it? Unfortunately, I also don't have any great answers. I will say, Erin, like the idea of consolidation, like you're not going to see consolidation from family offices and asset owners. And I don't think you want to see it from fund managers. I think you want disaggregated innovation at this phase. I think you have to see it in the deployers of catalytic capital and perhaps, philanthropists.
And I was talking about more in the context of NGOs that might end up consolidating in need of finding a way to have resources.
Yeah, and then forced consolidation. But I will say, we're also seeing, more experimentation around consolidation from deployers that have historically, been pretty siloed, and I think that is encouraging. This issue of no consolidated source of risk capital, be that catalytic or philanthropic, has been the case like forever. Like, it is so hard to raise money in this space because everyone wants different things, everyone talks about it differently, everyone measures it differently, and mostly it is individual principals making these decisions, based on whatever is able to kind of get in front of them. And if you could send your idea to some consolidated entity that would decide, USAID had some programs that were like that. Unfortunately, they're gone now. But I think this is fundamental to the problem, is that there is absolutely no consolidation. If there should be a JP Morgan, I worked there 4 years ago, actually trying to consolidate catalytic capital, but I think we're a ways away from doing that.
I want to hear what you have to say too.
So there are some efforts to pool capital to replace USAID funding, especially for organizations that didn't have to close their doors overnight, right? The last I saw of this, the one I'm thinking of, which is under the aegis of the Center for Global Development, they have $110 million in funding available. This is like a drop in the bucket, right? I think that for organizations that were super dependent on USAID or whatever replaced DFID when they started to strip it down, it's pretty important to understand who is in your network and who do you know, who do your fellow leadership folks know, who do your board members know, who do your bankers know, who can you get an introduction to, because the volume of requests for support is just overwhelming, right? And to Caleb's point, there's no consolidated place for it to go. There have been a number of attempts to put that together, including one by the Rakes Foundation. Just doesn't seem to work. The longer term advice is to always have a diversified revenue source. Unfortunately, we can't go back in time, but we need to start thinking about going forward in time for many of the organizations that are still standing.
Can I just add one thing to that, which is just I've seen some really interesting efforts by foundation donors to actually have people on staff whose specific role it is. I know Skull Foundation has this, others have this. Their role is solely to help their existing grantees to be able to diversify their income. And seeing that actually as like a responsibility that we have, not just, oh, okay, now also fundraise on your own, which I think is encouraging.
And I think that's super important. But if you hear what Erin is saying, foundations are focused on their existing grantees.
Right. It's not bringing.
Those are the organizations that they feel a sense of responsibility to, and well, they should. That means it's harder to be the new organization coming into the door of a foundation or a private donor or a family office that is trying to help the organizations that are already in their portfolio. So it's not good news. I'm sorry. Does anybody have a more encouraging question? Please.
Not super encouraging, but I had a question for Caleb. What's a investment that you regret making? Why, and what did you learn out of that experience? You can share the best
We're
investment.
still early on, and luckily, it takes every fund manager in the space about 3 years to actually raise their fund, and then, it's a 10+2 vehicle, so we have lots of time to socialize our results and consider the lessons. I think one of the most interesting things is that, we invest in a range of risk and return profiles because we see multimodal additionality potential in things that are going to generate 15% and things that will generate negative 5% equally, to be honest. But we manage our portfolio, we have a pretty diverse group of investors in terms of their preferences and instincts in terms of what constitutes maximal impact. And we try to get them all unified around, let's just deploy capital. Because the major problem in the space is not trying to figure out, whether you can identify the top 1% or the top 5% or being, the Warren Buffett of value investing. It's actually just there's a lot of really high quality pipeline. How do we get more capital in the hands of these entrepreneurs? And so we try to unify people around that. The stuff that often resonates with the families that are our investors is often not the stuff that we think is actually the highest quality stuff in our portfolio. The things that have emotional resonance is like a sleeve of our portfolio that we basically do, partially for our bona fides, partially because we think incubation capital and, really early stage stuff, can be really productive, but partially just like as an engagement and marketing tool because that's part of it tool, and then we do the rest of it to do our wonky financial stuff that we actually think is gonna scale.
Okay, thank you. Sounds like you don't have any regrets yet.
It's so early. I mean, yeah. We've only been investing for about 2 years.
All right, congratulations.
Thank you. We are at time, correct? We don't want to stand between you and lunch.
Maybe one more question?
But maybe one more question. I see somebody here.
Okay.
Okay. Somebody
My
has
question is just very simple. I think most of the global development projects have issues in terms of how they are laid out. Most of them do not have the sustainability
Right.
After the project, or maybe after the money is done,
Right.
or the incubation period is done.
Right.
So I ask you this question. As managers, as directors, in these difficult times, what kinds of innovation or what kind of strategies are you coming up with to ensure that once you fund a project and it goes to the community, it has to be sustainable even when the funds are not available?
Great question.
Yeah, it's a great question, and part of the problem, I think, orientation for Acumen since the beginning was, and aid has done incredible things, but to plop a grant program down in, let's say, the highlands of Colombia that is intended to support a community of small cocoa producers there, set it up, stand it up, but 5 years later, when that funding is out, leave is a really common practice in the aid world, and the emerging markets are littered with improperly placed, improperly set up initiatives like this that had great intentions but had no long-term sustainability built into them. What Acumen would do in that situation is work with the community to understand where the cocoa processing facilities should go, who's going to manage it, what skill sets they need to develop, what sort of cash capital they need to invest in it, and what an investment mechanism might actually look like that would support their long-term, 10-year sort of establishment of an initiative. We have a MES financing instrument that allows a farmer cooperative in Colombia to buy back shares of our initial investment over a certain period of time based off revenue generated from the cooperative. That's skin in the game. That's incentive for them to show up to work, to improve their facilities, buy back our shares, because guess what? At the end of that, they are 100% owners. They've developed the skills and capacity to run it. The farmers have felt the impacts of the sourcing component, and we step off and go do that 3 other times in a different place. That's a 12-year process that includes a full year of training of that cooperative before we even deploy any capital. So it's not easy, but when you wed those tools of philanthropy with business, you get a 50-year time horizon for a farmer cooperative as opposed to a 5-year.
We do need to let you have lunch. The panelists will be around during lunch, correct?
Oh, yeah.
Okay.
I will.
We're hungry, yeah.
So feel free to buttonhole them, although I also urge you to let them eat their lunch too. So thank you all for your attention and your great questions.
Thank you.